Welcome back. Well, the rand has strengthened over the past week despite mixed local economic data. Weak growth and lackluster manufacturing are headwinds, but strong global commodity prices and improved investor confidence appear to be providing stabilizing support for the local unit. TreasuryONE's director and currency strategist, Cilliers, joins us now for greater insight on the currency moves. Andre, thanks so much for your time this evening. Nothing new here, right? We are seeing that weaker dollar story playing out and working out in our benefit, right?
Absolutely. There is really very little. We're in December.
Yeah.
A lot of people's preparing to go and leave. And so is the market preparing to go and leave. There's not that much happening. Mr. Ramaphosa had addressed a family meeting. He's gone through the G20. We know about the turmoil between ourselves and America. But everything has been on the cards for a while.
Yeah.
Domestically, I have to say that if you go back to the medium-term budget, and we've touched on that the other day, then that went well. The markets accepted that as going well. We're still riding that wave. The RNE is going well. They had a meeting together with the president, and that came out positive. So at this point in time, everything is absolutely working well together.
Yeah.
The negative news this week about low growth for the third quarter, 0.5%. Once again, in the medium-term budget, Mr. Godongwana had lowered the growth forecast for the year. If you then look at the growth in first quarter, second quarter, then the expectancy was that the third quarter is not going to shoot out the lights. Some sectors performed well, some not. But overall, in line. So there's nothing that we can really add. And then you mentioned it. We're riding the wave of a weaker dollar. We're about to see one of these days a decision or hear about the decision from the Federal Reserve, because they will have their last meeting for this year. If we analyze the figures coming out of the United States of America, now we have to keep in mind that it's a really mixed bag of figures.
Yeah.
Some figures for September, some for October, some for November, because of the closure of government. Then there's some figures that's even not going to be released at all. So they have to look at what they have, and what they are getting at this point in time seems to be focusing and showing some weakness in their jobs data. In other words, slightly rise in unemployment and less job creation. So therefore, we can expect at this point in time, and so is the market expecting that there could be an interest rate cut in the United States of America during the next 2 weeks.
Yeah.
And that could add somewhat to a weakening dollar. But if I say that, and we look at the last couple of days and the weakening of the dollar, markets are in an interesting place. They front run these things.
Yes.
In the sense that the market is discounting this interest rate cut. So even if they come and they cut it, one should not expect a massive move on that, because it's already being discounted in the market. And the rand's riding that wave.
Yes. Talking about that in particular, where we are seeing markets already pricing in a rate cut, I wonder how much they are pricing in a more dovish Fed chair come next year, as we know that President Trump will be making that decision early next year. Kevin Hassett seems to be the man for the job, but of course we will wait and see. I'm wondering the kind of impact that would then have on the dollar, if we're still going to have that bearish outlook on the dollar, then in turn benefiting from that.
Depending on who's being appointed. I would expect the markets to start once again front running that, and that could have an impact on a dollar further weakening going forward.
Yeah.
Because it is expected that the central bank could cut 1 or 2 times more in this cycle. So I think the markets will start pricing that in as well, especially after the announcement of a new Federal Reserve governor.
Now, the dollar,
President.
yes, the dollar softness and the risk-off mood, of course, fueling gains in most emerging market currencies. And I'd also like to just get your views on how the local unit is faring within that basket.
Overall, we are doing slightly better than the rest of the emerging markets. And that's, if I say that, then that statement is against the basket. Obviously, within the basket, some currencies you're doing a little bit worse, some a little bit better, but measured in the basket, we're doing a little bit better. Now, we must remember that our interest rates are still at very good levels. We're still attracting a fair amount of carry trade, and our bond market are still also benefiting from that with an inflow of money on that end.
And on the local front, I do know that news is tapering out. A quick one, we have that Moody's credit rating review on Friday. Your expectations on that?
I think there's a slight chance that they could come out increasing us a notch. So in other words, very much the same as we've seen on the other rating agency, but most probably only changing and mentioning all the positive stuff. They are a little bit more stringent and not so easily forthcoming with upgrades. But there is a chance of that happening, yes.
All right, let's leave it there. Andre, thanks so much for your time and taking us through action playing out in the currency markets. Now, that was Andre Cilliers, Director and Currency Strategist at TreasuryONE.